Good afternoon, everyone, and thank you very much for joining me. This is the NFP live trade. It is the 7th of July. It's just gone past 20 past the hour. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to take you through the disclaimers, and we'll start off with the high risk investment warning. I'll keep this on screen for a few moments. All right, excellent. And let's take a look at the market commentaries disclaimer. And we'll use MarketScope to trade and TradingView. All right, let's just go ahead, I'm going to bring up MarketScope. In terms of TradingView as well, I'll just show you what I'm looking at. I've got the US 2-year yield and the US dollar, which I'll just keep an eye on TradingView. Let me just get that out the way. And here is the template, the layout that would be using. We'll be trading Euro, US dollar. I've got the hourly, I've got the 15-minute. This is a stochastic on the 15-minute. This is a stochastic and an RSI. And then we'll do most of the webinar, I would suspect, or most of the live trade, beg your pardon, using the 1-minute chart. This is a stochastic, it's the slow stochastic. And what we'll do is try and catch reactions off of the announcement for the non-farm payroll. Effectively, let me bring up Microsoft Paint, and I'll just run you through the aims or the objectives. And what we'll do is we'll put a 20 pip stop loss. It's never nice when it gets hit, but we won't take more than 20 pips, but we're going to try and trail it. Okay, we're going to try and trail it. So hopefully, if we get stopped out, it would be less than 20 pips. We're going to trail the stop loss, and we're going to go for 20 pips, 20 pip take profit. Okay, so that's what we are looking for. Anything, if we hit the 20 pip stop loss, it's going to sting a bit, but it will be counted as successful. We don't want to take losses heavier than that. If we get stopped out, but it's less than 20 pips, that's even better. And of course, if we hit 20 pips as a take profit, that would be fantastic. All right, what we need to double check here is just the methodology that we'll be using. And what's going to happen is we're going to get the non-farm payrolls. There are effectively 3 parts of the non-farm payroll that we'll be looking at. We'll be looking at the average hourly earnings, and this is month on month. Forecast at, sorry, let me just redo that. It's forecast at 0.3%. This is a reading of inflation. The number of jobs is around about 224K, and unemployment rate 3.6%. Those are the anticipated. We're going to get it out in the next three minutes or so, and depending on how the actual numbers are in regard to the forecast, we're either going to get a impulse up or we're going to get an impulse down. What we'll do is we'll wait for that impulse move, and once we get that impulse, we're going to wait for the correction. So it's either going to correct to the downside or it would correct to the upside. Either way, that's what we're looking for. If it corrects to the downside, we're going to try to take the long on the next leg up. If it corrects to the upside, then we're going to try and take the next leg to the downside. So that's the idea behind it. Generally, the last few we've been pretty good. Last one, we actually got 20 pip hit almost immediately. It wasn't the best trade. Hopefully this one will be better. All right, if there's any questions, go ahead and type those in. Any questions, go ahead and type those in. Let's just take a look. How much time have we got here? Okay, we've got about 2 minutes left. So we'll be looking to get in on the dip in the uptrend or on the rally in the downtrend. And the way that we would be looking to do that is we'll use reference candles. So the reference candle, the upside reference candle, will be on the minute chart, and we'll be looking at something like this, where it's 3 candles. Candle in the middle will have the lowest low. The candle on the right needs to go above the reference candle's high and close above it. If we get that, we'll take the trade to the upside. Okay. Similarly, if we get a rally in a downtrend, we'll be looking for the reference candles. And again, it's going to be at least 3 candles. There are complex forms to this, but I'll point, if there is a complex form, I'll point it out to you. But the idea is the middle candle's got to have the highest high, and then the candle to the right's got to go below it and close below it. So those are going to be our timing mechanisms, and then we'll put in the stop loss at the exact same time that we put on the entry. Okay, so we've got less than a minute now. We got 35 seconds. So let's go ahead, bring up market scope, and what we'll do is we'll keep an eye on the, let's maybe take a look at the 15-minute chart. Okay, we've got another 15 seconds. All right, another 5 seconds here. Okay, there we go. Whoa, there's a big gap up. That was strange. Big gap up. It closed, and now we're shooting up into the euro US dollar again. We're shooting up, so there's money going into the euro. US dollar has been sold down. All right. That potentially means there's a miss there. Let's see if I can get some of the figures. All right, so this is an interesting one. We've got 0.4%, so there's more inflation coming through, and that's on the average hourly earnings. The non-farm payroll jobs created only came in at 209, so we are lower than the forecast. Markets just now deciding, is the average hourly earnings going to be the driver, or is the non-farm employment miss going to be the driver? So we're looking to see the impulse. And if you take a look at the 15-minute chart, it's pushed all the way up to this R1 level. The R1 level is acting as resistance. That's interesting. If we can get a pullback, we can potentially go into a dip here. Let's see if we get that opportunity. The first candle you can see is a candle of uncertainty. A lot of selling on the upper shadow, a lot of buying on the lower shadow. Okay, so this is fairly complex trade. Let's go through to the 1 minute to see if we can track it. So here's the 1 minute chart, 15-minute chart, R1 level just above us. Acting. Let's take a look at the hour. Hours in bullish, in bull mode. Okay, everything's above 50. Stochastic pushing up. EMA is pushing up. 15-minute pushing up towards R1. All right, a little bit of a gap there as well. So it does look as if the inflation data is taking precedent here. And this is the impulse move up. Okay, so we want to see if there's going to be some sort of pullback. And if there's a pullback, we'll try get in on the long side. Let's carry on just keeping an eye on this impulse move. Unemployment rate, by the way, did come in at 3.6%. Non-farm employment change missed by 15,000. Now, what's interesting here, it looks to me as if the market's highly uncertain. I don't think this is going to be an easy trade in the least. You can see that all the candles, or at least the last three candles, are all taking place within the range of the first candle. The bulls haven't really had the Euro bulls haven't really had the fortitude to take out the first candle's high yet. Okay, so invariably tricky. Here's the first candle. Okay, here is Euro bulls in control. Take a look at the stochastic. Stochastic is in the upper quintile. Are we going to see if we can get in on a pullback here? Sorry, I just want to correct myself. The primary driver here seems to be the non-farm employment miss, not the average hourly earnings. It's moving in the opposite direction to the US dollar. So the miss is the primary driver at the moment, 209,000 versus 224,000 that was expected. Okay, so some volatility coming back in. And we've still got the impulse. We're still looking for the correction down for us to get in. Let's go through to the 15-minute. Okay, it's really pushed right past R1, R2, the next target, and that's 15 pips up. Okay. A bit of patience now. Let's just see if we can get in on the dip here. Okay, here's a potential reference candle. So we need the candle on the right to close above this reference candle. So it would be a very small dip here. If another 20 seconds for this low 109.236, low 32. Okay. Okay, that would be the trigger point. 21 seconds here. Okay. Oh, it's pushing down. So this is the new reference candle. Okay, here's the potential dip. Here's the reference candle. Let's bring in an arrow just to track it. Still no opportunity to enter on the pullback. We're watching very closely. 225. Okay. "26 seconds. Six seconds, still waiting for an opportunity to enter. Nothing given yet. Might have a new reference candle. Let's just check the low, 109.136. $138. This is still the reference candle here. Okay, new reference candle. 109.134. Okay. Back below R1. Here's the reference candle, looking for a close above the reference candle's high. It's always going to be the lowest, yeah. Mia's asking, is the reference candle always the lowest for the bull trend? Yeah, absolutely. So what it effectively does, it helps you trail the entry down. So you can see we're just trailing our entry down. Here's the new. So effectively, we should theoretically be getting in at a better price on the way down, assuming that the zigzag holds. Does that make sense, Mia? "25 seconds, we'll get the next candle. Okay, it's 12 minutes since we've got the news out, and we haven't had the opportunity to enter yet. Okay, new candle. New reference candle. Okay, so it's an exercise now of just staying patient. "18 seconds, we'll get the next candle. Okay, excellent. Okay, so we've got condition 2, prices moved above the reference candle's high. Now we just need it to close above that reference candle's high, and we'll have a position. Okay, 30 seconds. Let's keep the webcam on for the and I'll turn it on. If there's any problems, guys, just let me know it off. All right, let's put on the position. All right, so we're now long. Here's our reference candle. And we have a 20 pip buffer here to the stop loss, and we've got a 20 pip target here. Let's see if we can at least start moving the stop loss up. Okay, that would be the first start, to start moving it up. Just going to the 15-minute, taking a look there. Back to the 1 minute. All right, so what I'm nervous of is that we're losing volatility here. It's starting to move sideways. So let's just keep an eye on the actual range here. So if the average true range doesn't improve here, we may be stuck in no man's land. Let's just put our support in. Next candle, we can just get it to push higher off of that support. That's a little bit better. Okay, we'll start getting the stop loss higher if we close in positive territory here. I'm going to start trailing the stop. I'm not going to put it too close to the support. I want to give this trade some room to breathe. So here it would be just under the last support. I'm just going to take it a few pips below that and drop it, and we'll give it some room to breathe. And we've got about 10 pips off of the risk right there. Okay. I like the fact that the stochastic's starting to point up. It just needs to get to that upper quintile. Okay, we're heading in the right direction. Let's start locking in a little. Let's move this stop loss up a little more. Okay, we're right below the support now. Okay, we've got a bit of resistance now. Let's just mark in the resistance. Let's take the support and pull that over here. Okay, so now we're tackling resistance. Okay, another 5 seconds, we'll get another candle. Yeah, what we're going to do is we're going to just move this onto break even. So now we're on a free trade. Okay, our stop loss is on the entry point. So we've got all the risk off of this trade. I like the fact that the stochastic's moving up. Okay, we're steadily heading towards target. We're going to start moving positive in the next 25 seconds. Okay, some more resistance coming in here. Okay, next candle. All right, let's lock in a bit of profit. Okay, so we're on the positive side now of our entry. We can't lose money. We'll make at least 2 pips here. We'll be more aggressive in a moment. Let's just give this trade some room to breathe. We're 7 pips away from target. Okay, 15 seconds. Here we'll get the next candle. I'll put that right at the under this resistance turn support. You can see here's the resistance, here's the support. Just want a little bit more captured. Okay, so we're at the support area. Theoretically, of course, there should be some buyers here. Look at the stochastics moving into that upper quintile. So we've got about 5 pips locked in here. All right, this looks like we may get hit on the stop loss because the support's just been broken. Okay, let's keep an eye on that. "15 seconds, we'll get the next candle. Hopefully, what I'm hoping for is that this is another reference candle. Yeah, that looks more encouraging. So this could be the next higher trough in the trend. And now what we want is for this candle on the right to close above this. So we've got the stop loss in at the right point, giving some room to breathe. Some resistance coming in again. This looks like we may be hit here. All right, there we go. Good hit. So we took our stop loss from -20 all the way to positive 5.3, and we were just taken out on this long bar over here. So we took 5.3 off of it. I hope that you guys enjoyed the live trade on the live account, and we shall conclude at this point. If there's any questions, please go ahead and type those in. I just keep an eye out if there's any questions. We may have been a bit tight. It'd be interesting to see if this is a reference candle over here. All right, nothing coming in. Let's wrap up here, guys. Thank you very much for your time this afternoon. As always, much appreciated. Thanks, guys.